Okay.
So introduce yourself for the people that don't know who you are.
My name is Raul. I am 26 years old.
What?
I do a lot.
Can you show us what's in the garage?
No, that's confidential.
Why not? I'm gonna go check that.
That's confidential.
Why?
I'll have to wait till Sunday.
Okay. Anyways, until Sunday, got a couple questions for you.
Check.
You've been trading for what? 7 years, 8 years already?
8 years.
8 years. So like, how has your trading strategy evolved over the past 8 years?
It's constantly evolved and been refined probably almost every single year. I always look at refining maybe every quarter to see what areas I'm lacking in, but it's very different year after year. And you know, I don't want to say very different year after year, but there's definitely changes year after year. I would say intuition now plays a big role when it comes down to knowing when to size in and size off of trades, because a lot of these trades will have the same exact probabilities, but there's gonna be some trades where you just have like that intuition and that gut feeling that you're gonna wanna size into that specific position heavily. So that's where I would say intuition plays a big role for me. Last time I deviated from my strategy was maybe like a year and a half ago, 2 years ago, when the Fed was continuing to raise rates and the markets were crashing. And I just came off of a really aggressive win streak, and I ended up losing like $250,000 in 3 days.
Shit.
Stays roughly around the same. So like I'll have a base set number of contracts that I trade or lots that I trade with a base set risk. And then from there, it's when I'll really just define what type of trading system I'm looking for. And then from there, I'll really just define the type of position that I'm taking to see if I'll actually size in heavier on that trade or if I'll take some size off on the position. So I just came off of a really big win streak. For those of you guys that have been following me for a very long time, you'll see back in my stories, back on my YouTube channel, there was multiple days where I made $100,000 back to back. Ended up making a few $100,000 on that run. And then after that run, because my confidence and ego was through the roof, of course, after making $100,000 in the span of a few days, you know what? I ended up taking a $250,000 loss pretty much in the span of 3 days because I couldn't accept the fact that I was wrong. The market conditions were changing. And then after that, decided to take a break and then reset myself and humble myself by lowering my position size again and focusing on base hits instead of big home runs. So when it comes to increasing, decreasing risk, I don't really rely on indicators. I'll look at the price action confirmations that I'm going to be watching out for on that specific day, along with any order flow confirmations, which will determine the type of size I'm going to be looking to take and what playbook setup I'm going to be looking to trade. That is what's going to determine what type of size I take on that day. Really, it just comes down to understanding that trading is a game of probabilities. And then once you have the understanding that trading is a game of probabilities, you're going to win every single game, or not every single trade. There's still gonna be, even if you win 60% of the time, a good chance that you're gonna lose 4 or 5 trades in a row and still fall within that probabilistic trading system and expectancy of essentially what your trading system is. Honestly, it's just trial and error and then going through the actual experience and learning curve of trading. Most people, they expect to become a super professional and profitable trader within 2 years, which is unrealistic. Like there's so many different market conditions and market waves you're yet to experience. And then as you continue to level up in your trading is when you'll get to understand more about yourself and more importantly, who you are as a trader. So you have to go through it. There's no shortcuts and you gotta go through those years of experience. Not necessarily, really it just comes down to getting onto the pre-market, having a pre-market journal and a pre-market review, and then a post-market analysis and a post-market review so I could see what I did well on that day and where I could have potentially improved. Really by just having an if and then thought process when it comes to the majority of my key levels and major market structure points, which will all be able to help me to adapt to new market conditions, whether price is going from a bullish market to a bearish market or a ranging market. I'll always have a set criteria which will help me switch my bias faster. And then when it comes to like the economics side of trading, when it comes to like either CPI, FOMC, I tend to stay away on those days sometimes, just simply because there's a lot of hecticness and you can't trade before it, because if you're trading before it, you're essentially trying to predict what the news is going to be. When you start trying to predict, so you start taking losses.
Again, you can't show us what it's like.
No.
Why?
It'll be unveiled on Sunday. Trust me, for me to be keeping my SVJ outside right now, it's somewhat important. It's pretty big. Just basic market structure and support and resistance Most traders will overlook it because they're trying to overcomplicate their trading, but at the end of the day, you're gonna find liquidity at these levels, and depending on the type of level that it is, will determine how much liquidity is being generated at those levels, which will of course determine how big of a possible move you can get out of those ranges, and people overlook that. I believe that markets are becoming more efficient over time because of the amount of people that are getting in to the markets trying to actually trade, which could be a good thing because it just generates more liquidity for the markets overall. Really, it's just being aware of what the Fed is doing and what's going on in the economy and the world. There's a lot of different articles out there that you could read on a daily basis that you can keep yourself updated with. So it's just about doing your fundamental analysis and your fundamental research on the markets. Market wizards and trading like a casino. Stop focusing and worrying on so many indicators, except focus on reading the interactions between the buyers and the sellers. Understand what that interaction is trying to tell you via order flow tools and order flow programs, such as the footprint charts, the heat map, market profile charts, different things along those lines. So in that way, I have a better foundation for success in the long run. I would say it's most likely going to be a mix of both, because you have to have a system that has a positive expectancy in the long run that can be repeatable over time. And then on top of that, you also have to have the mental fortitude, the discipline to be able to stop yourself from continuing to trade when you're making mistakes, but then also be able to try and capitalize as much as possible without being too greedy and egotistical, because that's when a lot of traders start to lose money during the good times as well, and understanding when to size in and size off. I have found the most growth and success in my trading when I understood the concept of sizing in heavily on really great trading setups and maybe taking some size off of other trading setups. The analytical side of trading is pretty easy because, again, like when you're analyzing something, once you first get started, it may be a little bit more difficult and harder to understand. But as the years go by and you do it every single day and you start to understand why the market is doing certain things and why the market's moving the way that it is, the analytical side becomes a lot easier to deal with over time. But the hard part is going to be the more the psychological side, where you really have to understand yourself, knowing when to again stop trading and not give back too much profits to the markets. Because the problem with a lot of traders, what I'll find is, they'll do great for 2, 3, 4 weeks in a row, but then they give all of that profit back, or the majority of those profit back, in one single day, because they couldn't stop themselves from trading and they just wanted to make that money back. And your mind and body goes into a flight or fight response, and the majority of people tend to fight in those types of situations because it's part of regular human nature. But then that's where they find themselves in a big hole that they're gonna take who knows how long to get themselves out of, which you need to solve that issue early on and build your discipline early on, so in that way you can avoid making those mistakes as much as possible. So I would say it really comes down to a few different things. I mean, I guess this is a very subjective question, but to me, good traders are traders that are able to, just pay for their bills or achieve like the regular stuff in life and make okay money from trading. And like the really great traders are the ones who are actually able to be part of that 0.01% of traders, where you're making tens of thousands of dollars from trading on a daily basis, maybe hundreds of thousands or even millions of dollars. But not every single person that's a profitable trader will be able to get to those points, because they all have different mindsets and perspective on things. Oh man, especially in the beginning, it was really tough because one bad trading day will ruin my entire day. So it definitely caused a lot of tension in some of my earlier relationships, friendships, and even relationships with my parents. But nowadays, I mean, it's just part of what the game actually is. And, after years of experiencing the markets, when I take a loss, or I take a little bit more of a sizable loss on those types of days, it's kind of just like, it is what it is. Where did I do wrong? What did I do wrong? If I did anything wrong, and let's just fix it and move forward. Honestly, that I can live life on my own terms. I don't have to rely on anybody but myself to make my own income. And then at the end of the day, there's no cap on how much money you can actually make, which is amazing. There's days where maybe I'll make only a few $1,000s, and there's days where I've made $200,000 in a single day. So that's really what the satisfaction comes with from trading. Obviously, a lot of it is from the financial aspect and the financial gain from it, but it's again the feeling of I can do whatever I want whenever I want. If I have a really great trading day, I don't have to trade throughout the rest of the week. I can just kind of sit back, chill, and relax. I think I do see myself trading for a very long time, to continue to build my net worth through trading, and then obviously use my trading profits to reinvest elsewhere. Maybe if it gets too stressful at a point, I may take like periodic breaks, but to be honest with you, I love trading. I don't really see myself ever quitting on trading. There's definitely times where it's like, damn, you know what? I don't want to continue to do this right now. You know what? I'm just going to take a break, and then I'll come back in like a week and a half, 2 weeks, a month, whatever the case might be is, but I don't see myself stopping trading. I just love it too much.
All right, so what do you want for us to ask questions next?
Q banks, AB trades. What else is down here? Yeah, we'll leave it like that for now.
One last thing.
No. Go home. It's not happening. Just go home.
It's so very...
Just go home.